Support and resistance are the backbone of every market move. They decide where trends reverse, where breakouts explode, and where traders make or lose money. But here's the problem. Most people have no idea how to use them properly. They draw random lines, call them levels, and wonder why price never reacts. In this video, I'll show you why most support and resistance completely fails, and then reveal 3 indicators that finally make sense of it all, each one solving a different problem with how we normally see levels. Let's start with what goes wrong. Support is supposed to be a floor where buyers defend. Resistance, a ceiling where sellers step in. Simple enough, but if you've ever traded off these levels, you know how unreliable they can be. The problem for most support and resistance indicators is that they lack context. Was that level built on strong volume or just noise? They also don't adapt to market conditions, so you end up reacting to lines that mean nothing anymore. That's why we need smarter tools. Tools that measure structure and update as the market evolves. Let's start with one of the most advanced, the FVG volume profile. This indicator is a game changer in smart money and support resistance trading. Instead of static lines, it gives you zones backed by real order flow and gaps. It automatically detects fair value gaps, those spaces where price moved too quickly, leaving an imbalance. These areas often attract price later as the market balances out, and they act as magnets for price, forming natural supports and resistances. What makes this indicator special is that it plots a volume profile inside each gap, showing exactly where the heavy trading occurred, marked by a bright line called the point of control. That POC acts like the largest magnet for price, a true support or resistance within the gap. On a chart, imagine a large bullish move that leaves a gap behind. A few sessions later, price retraces down, taps the center of that FVG right at the POC line, and instantly reverses upward. That reaction isn't luck. It's the market filling an inefficiency and defending the volume-weighted zone. The indicator even cleans itself. Once the gap is fully filled, it disappears, keeping your chart clean and relevant. This is data-driven support and resistance. Dynamic, logical, and accurate. Now let's talk about structure, because horizontal levels aren't the full story. Before I continue, I've partnered with a brand new platform, coming this month called Prime Automation. This is where you'll be able to turn these strategies, or your own custom setup, into a trading bot that runs for you 24/7, connected to your preferred exchange. The platform isn't live just yet, but you can secure your spot to be among the very first users to get beta access. To get on the beta list, we're asking you to simply create a free account on the Blofin exchange. They'll be our initial integration partner because of their robust security. Make sure you use the dedicated link in my description. That's your ticket to the beta. By the way, the first 100 users who create an account and make a deposit will unlock exclusive bonuses in USDT. So you need to move fast. Click that Blofin link in the description right now, create your account, and secure your spot for the Prime Automation beta, plus your exclusive bonus before time runs out. The Pivot Trendlines with Breaks indicator by HG is one of the simplest yet most powerful ways to track real-time market structure. It connects swing highs and swing lows, forming automatic trend lines that adapt as new pivots form. These lines show you where the market has repeatedly respected a slope, visualizing both structure and sentiment. When price breaks one of these lines, the indicator highlights it, showing a confirmed structural break. Take a 1-hour chart, for example. You'll see a clean ascending trend line connecting 3 major lows. For hours, that line acts as support for every touch, and price bounces. Then a strong red candle smashes through the line. The indicator marks it as a break, confirming a structural shift. Price comes back to retest that same line. This time, it rejects and collapses lower. That's a picture-perfect flip. Former support becomes resistance. The indicator catches it instantly. No guessing. This is why structural awareness matters, because every break and retest tells the story of where momentum is heading next. Now for something completely different, the ICT Premium Discount Zones indicator. It helps you understand where price is within its overall range. It splits the current swing range into 2 halves. The top is premium, price is expensive, and the bottom is discount, price is cheap. This gives you a logical framework to decide whether you should be looking for buys or sells, instead of reacting to random lines. On another 1-hour chart, we draw our range from the recent swing high to swing low. The indicator shades the upper half red, premium, and the lower half blue, discount. Price rallies into the upper zone and immediately drops. Later, it dips into the lower zone and reverses upward again. 2 clean trades, both using logic. Sell from expensive territory, buy from cheap. It's simple, but incredibly effective, giving structure to every trade idea without clutter or confusion. Every indicator shown in this video works beautifully on its own. You can use FVG zones to find high-probability re-entries, pivot trend lines to catch breaks and retests, and ICT premium or discount zones to frame your trades in logical ranges. Together, they give you a full picture, but even individually, they'll transform how you see support and resistance forever. The point is this: stop drawing random lines and hoping they hold. Start reading structure, volume, and range, the way the market actually moves. Because when you do, you'll see support and resistance not as guesswork, but as the skeleton of every market trend.